Well, hello there. My name is Darren Wilson. I'm here with my friend and work colleague, Akhil Patel. How are you doing, Akhil?
Very good, thank you.
So we're here in Melbourne. We recently sent out via the PSE Twitter a call to action for questions, and we've had a really good response, which we're delighted with. I think you're going to have get an awful lot out of the questions that we've got in this session. So we've got a lot to do, Akhil. We should start straight away. Your thoughts on the United Kingdom being in a recession? Do you think it's just a blip?
I do. Yes, it is just a blip. It's probably even a blip of a blip. So you get periods when economic growth is slower. That could be something to do with the weather. It could be, it doesn't necessarily mean there's a crisis looming. I was actually a little surprised that there was even a recession, but given that everyone had been calling for economic catastrophe, minus 0.3% growth over a quarter or two is really nothing to worry about. Cycle is well on track.
Excellent. In terms of cycles, actually, the 20, the 60 and the 90-year cycle in stock markets, what do you think 2024 is resembling the closest in that cycle count?
I suspect this question is from a subscriber asking which curve we're following on our forecast roadmap. So I won't reveal too much, that's for subscribers. But it's uncanny how the stock market does follow curves from previous cycles. It's a bit early in the year to say, I think. In any case, I will send a subscriber update on that in due course.
Excellent. Someone actually mentioned Jeff Bezos, owner of Amazon, selling a lot of shares recently. In fact, he's been doing it since 2021. Does that indicate to you we're about to start the winner's curse, the final 2 years of our current cycle?
It's interesting. I don't know if, for someone like Bezos, who is really wealthy, I don't know to what extent something like that would actually indicate anything about where we are in the cycle. Obviously, it means that he thinks his stock is good value and he wants to cash in on some of the gains that we've seen in the last couple of years or even longer than that. And he's probably a fairly capital-hungry man in the sense that he's probably got some pretty expensive spending habits and he needs to cash in a bit.
They're only going to get more expensive.
Yeah, exactly. So I'm not sure it really says much.
Okay, no, that's good. Couple of questions about the winner's curse. Here's another one. Is it better to buy now or wait for the precipitated drop to buy your own home? And from an Australian point of view, what are your expectations for either Perth or Brisbane to outperform to the peak of the cycle?
Okay. No, there's good questions. I mean, for those of you who are watching who are not familiar with the cycle, we say that the final 2 years of the cycle into the peak, which we forecast around 2026, is the winner's curse phase. In my book, The Secret Wealth Advantage, I call it the mania phase. I think what we're seeing. Sorry, the question was on Brisbane and Perth. Is that right?
Specifically, yeah. In terms of outperformance.
Yeah, I mean, I sort of say this in my book. You tend to find that the biggest cities in a country have a very strong first half of the cycle relative to other cities. So in the case of Australia, it's Sydney and Melbourne, of course. In London, it's London. In the UK, it's London. In America, it'd be New York and sort of Atlanta and so on. And then as the cycle develops, you get it bigger sort of growth in cities that are not quite as big. And so Perth and Brisbane would be that in Australia. And of course, they have the added bonus in a way that they are in states which are pretty important for resource extraction and processing. And we are also approaching the peak in the commodity cycle. So I do expect them to outperform. And similarly, secondary and tertiary cities in the US and the UK, I think will probably outperform London and New York as well.
Yes.
So it's kind of a regular pattern in the cycle.
Great. And what about that question about buying now or waiting for the drop?
Yeah, it's a really good question. Sorry, I forgot to answer that. I think it sort of depends on your circumstances, but in general, I think we are sort of far enough away from the peak that if it's a good investment, it's sound, it's good yield, you cover your costs, it's in a good area, there's infrastructure going in, it would still make a sound investment. And in fact, I kind of bought my first property at this point in the last cycle, and actually the gain between this point and the peak was sufficient to kind of when it came down again, it didn't come back down to where I bought it.
So it insulated you, the capital gains.
Exactly. So I think you can certainly find deals like that, regardless of whether you're where you are in the cycle. If you are wanting to buy your home that you live in, I think you should go for it, because it's definitely better to have an asset that you own than that you're renting, and that the rents can be put up at any time. And you get a good place. You're not overpaying, you're not over borrowing. You're comfortable in terms of servicing your mortgage. You've got a stable economic situation. I think that is definitely the thing you should do. I don't think you should wait for sort of 4 or 5 years, because even if prices come down, you get a great deal. It may not be as cheap as it is now, and of course you won't have had the opportunity to pay down some of that mortgage. You'll be paying probably increasing rent to a landowner. So I think I would say, if it's a good deal, good property, something you like, go for it.
Great stuff. I'm glad you covered that. We'll stay on real estate actually for the next question. So this one relates to the expected peaks in the United States, Australia and the UK, and whether they're tracking on time. What do you believe will be the telltale sign? So I'm assuming just a sign that we're at the peak of the cycle. And what do you think the catalysts will be that tip us from boom to bust? And then something here just about Evergrande's impact on the real estate cycle, which of course is a massive Chinese-based real estate developer.
Okay, so quite a lot in that. I do try and, in my book, chapters sort of 12 and 14, try and document exactly what it is that you need to look out for. I'm obviously not going to go into that in much detail here. You can kind of read it. The key thing to watch is US real estate markets, but if you can, real estate land markets, but of course the data is not so readily available, and that will peak first. Now, we typically find in the course of a cycle, it's sort of 14 years up from the low. The low in the US was probably 2012, 2011, somewhere around there. So you'd look for the peak in the US land market to be in late 25 or late 26, that kind of time frame. The US typically leads other countries, and so they would be anywhere between 6 and 12 months ahead of other countries. So that's kind of gives you a window for the UK and Australia. So the kind of real time where you need to be watching out for a peak in land prices is sort of between sometime in 25 through to 27, depending on kind of where you are living. But focus on what's going on in the US. There was a question about the trigger event. Was that right?
Yeah, some telltale sign that may.
That's right, the telltale signs. So, all the standard things, kind of hedonistic behavior, extravagant spending, crazy investing, very high valuations of assets, particularly ones that are kind of speculated in. Yeah. Building in sort of fairly marginal locations, the world's tallest building. It's all kind of documented in my book, in Phil's book. So that those are, I think we've seen from the news over the last 12 months, that's not going to change too much. So in the sense that kind of those telltale signs are going to be the same this cycle as in previous cycles. The catalyst that might trigger the peak, it's hard to say.
It's too early, isn't it?
It's going to be credit related, obviously, or it's going to have a very major impact on the ability of finance providers. Now, that might be regular banks, or it might be kind of shadow banks, as they're called nowadays. Whatever damages their ability to lend will be the thing that is the catalyst. Hard to say in advance what that will be, but certainly we'll be on the lookout for our subscribers, and hopefully we'll work it out between us as it happens.
Yes, and Evergrande, and perhaps even just in general, Chinese property developers, just how much exposure do they actually have to the global real estate cycle today?
I think kind of virtually none. They are, China is the world's largest real estate market. Unsurprisingly, because it's by far and away, it's not the world's largest population, but it's probably the world's largest economy, actually. And a lot of people need housing. So clearly, if you're mismanaging your portfolio and your financing and your other things in China, in the Chinese housing market, and you get it wrong, It's going to create a big problem in China. I think what we've seen with something like Evergrande is that the party was able to kind of contain it. Now, how does that affect the rest of the world? Well, clearly it's had an effect on the Chinese economic situation, which has then had an effect on the rest of the world. You know, it emerged from lockdown, with all these sort of problems in the property sector, partly because there was stricter regulations. I mean, and it wasn't just because of COVID. It started before that. They were trying to reduce the amount of leverage in the system. And normally what China would do in that situation is to stimulate by building more, but they didn't want to go down that route again. And so that's why China had a pretty slow emerging scenario from the lockdown. And everyone was expecting Chinese demand to come in and it would boost global growth, and it didn't happen. And so it's had a sort of a slightly depressive effect, but it's not been catastrophic in any case. There are parts of the world, the US has been extremely strong. Even, parts of Europe have been pretty strong. Middle East going gangbusters, the Far East.
Yes.
So, I think the impact of Evergrande has been kind of overstated.
Yeah. And if the indices are any indication, the likes of Japan and India also, very bullish position right now.
Yeah, absolutely
too.
right.
So
absolutely right.
they can take up some of that slack. No, that's great. That's a good way to surmise that. So these last questions refer to the end of the cycle. This one might be a bit difficult for you to encapsulate the expected drop in percentage at the end of the cycle. I assume that's for land.
Okay.
And a bonus question: what are interest rates doing during the crash times?
Yeah.
And do you expect short selling within the stock market to be potentially banned?
Right.
And where would you like to preserve your capital?
Okay.
So quite a few questions there.
I think we're getting quite a lot of these questions. How do we prepare and so on? I mean, we aren't at the end of the cycle. And while it's good to be thinking ahead, you do also want to, be to a certain extent taking advantage of the current kind of situation. But then nonetheless, let's see if we can unpack some of it. I mean, we'll obviously have more to say in the coming years about this sort of thing. Expected drops. Well, in real estate terms, I would think you would expect or allow for 20 or 30%.
Is that a historical average over the?
I mean, the data is a bit. I mean, real estate is a locational asset, and so comparing what's going on in different markets is difficult. But yes, that's sort of an average rule of thumb that we use. So if you can survive a drop in the value of your residential real estate of that magnitude, you should be okay. Having said that, there are some parts of the real estate market, particularly marginal locations, that have seen very rapid growth right into the peak. They can fall very rapidly on the other side. So that's not a guarantee that it's only going to be 30%, but that's kind of how. Commercial real estate could go down much further. If you own commercial assets in areas where, the kind of local economy collapses, that could end up being totally worthless. So you have to be very careful where you're acquiring property. Interest rates are typically cut during a crash. I mean, this is the playbook, kind of what happened during the mid-cycle slowdown during COVID, when cutting interest rates to zero stimulated the economy to a very large extent. At the end of the cycle, it doesn't work because we have a falling land market, we have problems in the banking system, and just lowering interest rates isn't going to increase the demand for credit. Do I expect short selling to be banned? I don't know. I mean, it becomes quite political because, you hear stories of people shorting banking stocks and other things, real estate stocks, and making lots of money. And people don't like to hear stories of some savvy traders making money in that sort of scenario. I don't think it will be banned because, well, depends on who's in power and sort of. I mean, short selling actually means that a market has some buying power because, to cover your short positions, you have to buy back the stock. So it means that a falling market doesn't go down in a straight line. It can have some periods of retracement and so on. And you kind of want that, particularly if you've been in the market too long and you need to get out. You kind of need those periods. And I'd hope that our political leaders are savvy enough to recognize that. As to where to put your money, hard to say now. I mean, I wouldn't just go and sell your entire real estate portfolio at the peak. If you've got good quality assets, you have a margin of safety, you've got good tenants, etc., just keep it. So that's one place. I do expect that sort of deposit insurance systems will work. So there'll be sort of cash. You can have money in gold. You might have a bit of Bitcoin, though of course Bitcoin might be displaying sort of characteristics of a haven type thing, or it might just be totally kind of collapse in the way that a lot of other things do. So we just have to wait and see how the market develops. Yeah, I mean that's probably all I can say for now. We'll say more about this in the coming years.
Yeah, I'm with you on the short selling. I think that US indices, they might have a limit stop on the market of maybe they might only let 20% fall and then step in and stop the short selling for the day.
Yeah.
But as you say, outright short selling, it's hard to think of a scenario where they'd be like that because it's just a natural part of equity markets.
Exactly.
Great. Could the 18.6-year cycle be a fraction of a larger cycle that lasts for a significantly longer time span? This one's open to a bit of interpretation, I feel.
Yeah, I think it sort of depends on how you conceptualize cycles. I think the best way to think about it is each 18.6-year cycle is a complete story that goes from recovery, as I set out in the book, to kind of a boom, obviously with a mid-cycle in the middle, to a mania, to a crash, and that completes the story. And in fact, I've tried to structure my book deliberately like that to be able to tell that story.
Yes.
Now, some people argue that the long cycle or Kondratiev wave, which is 54 to 57 years long on average, is 3 real estate cycles, and that is to a certain extent true. But I think it's harder to tell that as a single story compared to the real estate cycle. So the answer is both yes and no. But if you were going to focus on one thing, I would focus on the real estate cycle because it kind of hits fundamentally at how our economies are structured, and so it's the most important kind of unit of analysis, as it were.
Excellent. Last question now. We left this last one for a reason, and I'll read it verbatim because it really does sum up how we feel personally in the business. So there's 2 ways I see the real estate cycle. Liberating, that I have an edge with my investments, yet completely debilitating knowing how much better our economic policies could be and how brutal an effect it has on a large portion of our society. How do you overcome this paradox? That's pretty powerful, isn't it?
I mean, fair play to whoever sent that question in, because I feel the same sort of ambiguity about the cycle. And in fact, I came into kind of studying the cycle partly because I wanted to know, as I've said, how my family's business could be better prepared for the next one. But it was also partly with the angle, which I haven't really spoken so much about, partly because of the angle of trying to reform the system, actually make it a fairer system. Because, we've seen over the last 10 years how catastrophic it can be for some people when, the downturn and, you get all this sort of nonsense politics in the aftermath. And we've had, a decade of nonsense. I mean, I know that some people like the way things are going and so on, but I mean, it's just utter nonsense. You can, you win power by, flat out denying facts and other things. Totally different from before, by the way. There was at least a certain minimum standard, I think, in previous situations. So there is an ambiguity. I think the only thing one can say is you have to recognize the system for what it is, not what you would wish it to be. You have to manage your affairs according to it. I mean, there's just no way of getting around it. And I do say this in my book: vote for politicians who are wanting to make substantial and proper reform. And I set out some of that reform. I mean, it's been documented in the works of Fred Harrison and other people in much more detail. If you come across people who understand that and are trying to do something about it, support them, and hopefully, in the process of reforming, your family is safe financially and economically. And then you support reform and we'll all be better off. So that's kind of the way that I resolve that particular paradox.
What a profound way to end. So if you're keen to perhaps follow our research, in the description box below this video, you'll see a link to our Property Cycle Investor newsletter, completely free. Comes out every week and helps you watch the turning of the cycle. And also please strongly consider buying Akhil's brilliant new book, The Secret Wealth Advantage. it's an amazing tool to help you maximise the remaining years of the cycle too. So have a look.